Generating legendary dividend income requires thinking like legendary investors. There are few investors alive today more successful than Warren Buffett, and Warren Buffett loves dividends. He loves them so much, in fact, that over half of Berkshire Hathaway's holdings pay dividends. Buffett has been holding these stocks for at least a decade, including a high-yield company that might surprise you. Let's jump right in and talk about the dividend stocks that Warren Buffett keeps buying. First is American Express, AXP. American Express is a global financial services company headquartered in New York City. It's also one of Berkshire Hathaway's largest holdings. Since 2012, Buffett has increased their holdings from just over 150 million shares to almost 152 million shares, valued at over $23.5 billion. It's one of the largest credit card issuers in the world, with over 114 million cards in circulation and a total of $36 billion in revenue. The company offers a range of financial products and services, including credit cards, charge cards, travel services, and merchant services. AXP operates through three main business segments: Global Consumer Services Group, Global Commercial Services, and Global Merchant and Network Services. The Global Consumer Services Group provides credit and charge card products to consumers around the world, while the Global Commercial Services segment offers a variety of payment and financing solutions to businesses of all sizes. The Global Merchant and Network Services segment provides payment processing services to merchants and partners. In recent years, AXP has focused on expanding its digital capabilities and investing in technology to enhance its customer experience. The company has introduced a range of digital products and services, including mobile payment apps, online account management tools, and digital wallets. It has also invested in data analytics and artificial intelligence to improve fraud detection and prevention. American Express currently yields a weak 1.6% dividend on a $155.05 share price. Although AXP has been paying a dividend for 34 years, they lost their perpetual dividend increase streak in late 2020 when they failed to increase their dividend past $1.72 per share. The dividend increases resumed in early 2022 and has increased to $2.40 per share since then. Payout ratios for Amex have been very safe historically, not once topping 50% for any income metric in the past 10 years. Income growth has been steady, all increasing between 3 and 9% annually since 2014. American Express is a household name in the credit card industry and holds a massive market share in consumer finance. The weak dividend yield turns me off from the stock, but given the low payout ratios and steady financial growth, AXP would be a perfect pick for someone more interested in stability and growth over short-term income. Next is Bank of New York Mellon, BK. New York Mellon is a global financial services company based in New York City. In 2012, Warren Buffett owned a little over 5 million shares of BK. As of Q1 in 2023, Berkshire Hathaway reported owning over 25 million shares. Not only has Buffett allowed dividends to reinvest and compound, he has invested significant amounts of additional capital into this large banking stock. Bank of New York Mellon is the 11th largest bank in the United States by assets, with a total of $324.7 billion in assets under management and over 48,000 employees worldwide. The company is primarily focused on providing investment services and investment management solutions to clients around the world. BK operates through two main business segments: investment services and investment management. The investment services segment includes a range of services related to custody, fund accounting, and securities lending, as well as treasury services and foreign exchange trading. The investment management segment provides a variety of investment management solutions, including mutual funds, ETFs, and separately managed accounts. In addition to its core business segments, BK is also investing heavily in digital technology and innovation to enhance its client experience and streamline its operations. The company has introduced a range of digital products and services, including a mobile app for clients, digital investment tools, and an AI-powered trading platform. BK currently yields a 3.6% dividend on a $41.19 share price. Over the past 10 years, New York Mellon has increased its dividend by 9.4% annually and has increased its dividend for 13 consecutive years. BK has had extremely solid financial growth, increasing free cash flow by 20.5% and cash flow by 17.2% annually over the past 10 years, and has only had 1 year of negative free and operating cash flow reports during the same time period. Payout ratios have also been very safe, with aggregate payout ratios typically landing around 30%. All this sounds great on paper, but BK has actually underperformed the market since 2007 in dividend-adjusted returns. That being said, BK remains a solid dividend stock, and it's currently trading at over 25% down from its all-time high. I don't typically like to invest in stocks below a 4% dividend yield, so I'm going to have to hold out until the stock dips a few more percentage points. As far back as the SEC holds filings, Berkshire Hathaway is reported holding tens of millions of shares of U.S. Bancorp. In 2012, Buffett reported owning over 69 million shares of Bancorp, and as of February currently owns over 290 million shares. US Bancorp USB is a large American bank holding company headquartered in Minneapolis, Minnesota. Currently, it's the fifth largest bank in the United States by assets, with a total of $585 billion in assets and over 70,000 employees. The company operates in 26 states across the country and offers a range of financial services, including banking, investment, mortgage, trust, and payment services. USB has a diversified business model with a strong focus on consumer and commercial banking. The company's consumer banking division offers a variety of financial products and services, including checking and savings accounts, credit cards, personal loans, and home mortgages. Its commercial banking division serves businesses of all sizes, providing them with services such as cash management, payment processing, and lending. In recent years, USB has focused on expanding its digital capabilities and investing in technology to enhance its customer experience. The company has introduced a range of digital products and services, including mobile banking apps, online account opening, and digital wallets. It's also invested in data analytics and artificial intelligence to improve risk management and fraud prevention. USB currently yields a 5.7% dividend on a $33.55 share price. The banking and finance stock pays a hefty $1.88 dividend per share and has been increasing the dividend for 13 consecutive years. Over the past 10 years, US Bancorp has a dividend growth rate of 8.6%, although this growth has been slowing at about a 5% pace since 2014. All income metrics have been growing between 3 and 9% per year, and USB has not once reported negative earnings since 2014. Payout ratios have also been extremely safe, averaging well below 60% for the past 10 years. Warren Buffett illustrates his financial genius in this pic. The US-based banking company has had incredible financial growth and strong dividend payouts for over a decade. The safe payout ratios make me comfortable knowing the company is not distributing outside its means and will continue to increase their dividend for many years to come. Given the fact that USB is currently trading very near their 10-year low despite their impressive financial growth, I'll be picking up as many shares as I can while it's on sale. Warren Buffett is one of the greatest investors of our time. Studying his value investing theory will certainly provide useful insights for our own decision making, but taking a peek inside his actual long-term plays can give us more practical and actionable information. Buffett has been very upfront in press conferences and investor meetings that he doesn't buy a stock unless he intends to hold it forever. The stocks discussed today certainly fall into that category and will likely continue to provide handsome returns for Berkshire Hathaway for the foreseeable future. If you like this video, please hit the thumbs up button and leave a comment to let us know what you think. If you enjoy dividend stock analysis, make sure you subscribe and turn on notifications. We release new videos analyzing stocks and outlining dividend trading strategies every week, and have bigger plans for more resources for you in the near future that you really don't want to miss out on. As always, stay safe and take it easy.